Hello and welcome to the Cryptocurrency News Channel. This is the TAFA and chart analysis for February 4th, 2022. And we've had a very good day today. Indeed, 41,500. You know that mark that I was talking about yesterday that we didn't go if you look at the monthly, that we didn't go past the last all-time high. Well, that is now solidly broken. We are solidly over 2,000 points above the high. We are only about 2,000 points or 2,500 points below the last plateau. And if we keep going up over the weekend, we can blow past that last plateau or equal that last plateau, and that would actually signal a bottom to the dip. So it would actually need to rise about 2,000 points more. But considering the bullish scenario right now, I do think that's actually possible. You can see both from bottom to bottom and top to top. You can see from bottom to bottom and top to top that we are actually headed upwards since this last dip. And unlike this dip, last dip, where we only maxed here and didn't go out any further, we did max here, but we are going up, and this is definitely significantly above. Where we were. So I think right now it looks like we're breaking out of this ascending triangle pattern, and that is very bullish for us. The head and shoulders also does not work right now like this one, because obviously this is much higher than the last head and shoulders pattern. So we definitely might be breaking out right now. If you take a look on the 3-month, we still are kind of in a descending pattern all the way back from November, obviously, when we had the high. And the thing is, yes, we had a descending pattern up until here, but you can see from here to here, we have actually almost evened out, and we just need about 2,000 more points of gain to kind of break this bearish pattern. So I think we're not completely clear of 40,000 yet, even though we're 1,500 points above. But the thing is, we are clearly kind of having a break at least, and it's not looking like we're establishing the same pattern as the dips previously, because we definitely have an up pattern. We definitely have a definite up pattern over the long term since the previous dip. And remember, the previous dip only happened because of the stock market started dipping. These dips, the stock market didn't actually dip all that much in December and November, but the previous dip in January only happened because of the stock market. And now since the stock market's actually going back up, we're actually going back up too. Think about it. We had good job numbers. They only said that we were going to gain 150,000 jobs. Some analysts even predict that we're going to lose jobs over January, but we ended up gaining over 467,000 jobs. So that's pulled up the economy, at least temporarily. Now, some of you might be thinking, oh, they're just going to raise raise interest rates not to curb the inflation. They are, but that doesn't happen until March, first of all. And good economic and job numbers have always been more important than them actually hiking the interest rate 25 basis points, which is 0.25%. So all the signals actually look pretty bullish right now, especially for the short term. Like I said yesterday, I thought the labor numbers were going to be pretty bad, but they ended up being very good. And since Amazon earnings were really good and labor earnings were actually really good, labor numbers were really good, we're heading into a very bullish weekend, in my opinion. If you look at the stock market, yes, the Dow is down, and you might be saying, well, it's not following the stock market, but look at the NASDAQ. The NASDAQ is up 219 points, and Bitcoin is definitely following the NASDAQ more than the Dow, because Bitcoin is looked at more in correlation with the technology sector than in the general stock market. And overall favorable earnings from tech companies have definitely boosted it. If you think about Facebook was pretty bad, or Meta, or whatever the hell you call it. Netflix was bad, but if you look at Microsoft, Apple, Amazon, they were all really good. So I think there were more good and bad. And plus, Amazon's earnings was the last one, so people have that the last one will actually stick for a long time. And plus, today what really boosted it was the labor numbers. And I don't think there's any more disastrous reports coming out over the weekend, barring Ukraine and Russia. But I don't think Russia's going to invade Ukraine at this point. So that's probably not going to happen. And even though we will have some swings, ups and downs, especially in the next couple of minutes, if you see it swinging down towards 41,000, don't freak out, because there was a big candle up. So swing halfway down isn't that big of a deal. So we are actually very bullish. The NASDAQ is up. The labor numbers are actually up, and I do believe the Dow will actually start off positive next week, and crypto will start positive next week. So there is a very, very good chance that we'll hit the 44,000 plateau. I'd probably give it like a 60% chance at this point it would hit that, and that would definitely signal a bullish signal. Because if we hit this plateau, then like this dip will probably be the bottom. So I think there's a decent signal that we might have actually hit the bottom. I don't think we've bounced up ever nearly like this percentage or like this much since we actually started dipping. And like essentially we're several thousand up from the bottom of the dip. We're like almost 9,000 up from the bottom of this dip. And I do think like the ascending triangle is kind of breaking right now. Definitely breaking. Like even this hump right here wasn't that much greater than this hump. And like this up here is way, way greater than any of these bumps before. So I think the ascending triangle kind of has been broken. The head and shoulders for the last bump doesn't really work. And we are definitely like in an upward trend, at least in the short term right now. The technicals say as much. This changed a lot. Basically, the EMAs and the SMAs all the way down to 30 days are actually positive buy. And yes, the EMAs are higher than the SMAs, which suggests that at least like pretty much on the monthly, for the daily graph, at least on the monthly chart, essentially it switched from sell to buy. So maybe buying at least until mid-February would actually be a pretty good idea right now based on the numbers. The RSI, the stochastic, and the commodity channel index are all still negative. The commodity channel index is actually almost getting to be oversold, but not quite there yet. But like that's because of today's bounce. The momentum and the MACD have both converted to buy from sell. And the average directional index is getting weaker. And it was actually getting stronger, forming a downward trend, but now it's actually getting weaker because we reversed upward. So that downward trend is definitely being broken right now. So right now, I think like we have a decent chance of just completely breaking the downward trend and maybe starting an even trend or an upward trend. So basically buying from now until mid-February actually might be a decent idea. I'm just going to hold and keep staking. But if you're looking for a short-term buy opportunity, maybe this is the time to do it. Altcoins will probably follow Bitcoin, but Bitcoin will probably go first. Still, definitely wouldn't play futures, long or short anything, because that's just a fool's game. But if you're looking for spot buying, and if you're afraid that you're going to miss the pump, right now is the time to do some DCAing in. Because, even if it does dump again, it'll come back up in a few months. When do I think the actual big bull run will actually come? Probably as we close in towards the summer, late spring, early summer, because remember, we still have that rate hike in March, and I don't really know how that's going to affect the market. I'm still not 100% sure that Russia is not going to attack Ukraine, because that could just throw everything off. But if they don't actually attack Ukraine, the next thing to look out for is the March rate hikes. That'll probably temporarily shrink the economy a little bit, but maybe it'll recover within a week or two, hopefully, of that. And then as we head into the summer, I think the raising of the interest rates will start to control inflation. And as inflation starts to come down, people will gain more trust in the economy and will actually start going back up. That's where we are right now. So on the daily, I would say it's probably a buy out to mid-February at least. But the long-term indicators like the 50 and the 200 are still on sell. The 50 is still below the 200, so the golden cross has not actually formed yet. And we need about at least 9,000 more points before the EMA on the 50 crosses the EMA for the 200, which would actually make a golden cross. So on the weekly, it's still all sell, but like I said, we're very close to the $44,000 mark, and that would actually turn the 10-week EMA up to positive. Definitely looking forward to that point. None of the oscillators are saying anything. The momentum is definitely building up in the positive direction. Like I said, we broke out of the ascending triangle, and so the momentum has turned positive. But we're still on a sell all the way down to the 100. We need about 3, 4, 5,000 more points before any of the EMAs and the SMAs for the weekly actually become positive. But the thing is, we are moving in the right direction, and since we've moved out of the ascending triangle, I think the next movements are actually going to be positive. If you look at the 1-month chart, we still haven't broken the downward trend for the 10-month EMA, but we're getting pretty close, about 2,500 points until there. We've made up most of the gap. Remember, we were like 35,006 just a few days ago. So on the monthly, it's still saying sell, but realistically, I think into mid-February, into Valentine's Day, let's say, I think it is more of a buyer's market into Valentine's Day. I don't really know what's going to happen until then, because with the inflation rate still high, I still think there is definitely a lot of still worry in the market, and they're going to hike interest rates. So March actually might be a little bit of a pullback as we get to the date where they actually hike interest rates. I still think that'll be a short-term effect, and by like the time May rolls around, I think we will be in more of a bull market. But like I said, the last dip was actually created by the stock market woes, and I think the stock market is actually going to start to pull back now, and because the stock market will actually start to recover from this giant dip, we should recover. I don't think we should have really dipped below 40,000, but then the giant stock market dip happened. But the numbers are much, much better than we had expected them to be. And because the numbers are much, much better than we had expected them to be, I think we will actually pull back at least to the $44,000 plateau before too long. So that's the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.